What are the different types of loans and which one is best for me?
That's a tough question until I see the overall profile of each client. And the top programs that are out there are conventional, which is one of the better programs. Sellers like that kind of offering. It's a little harder to qualify for. It's very credit score based. Typically, you want to see a credit score at least over 680, but I mean, I'm even leaning nowadays with the difference in rates between FHA and conventional that you want to have over a 700, 720 before you start thinking about conventional because it is so credit score driven. But it's better financing because conventional is a little nicer on the appraisal side of it. That's where a lot of listing agents want to see a conventional offer versus FHA or VA because they're going to be more stringent on appraisal requirements, which I don't know. I mean, if the house is
It's
in
not
good
that
shape,
bad.
it's not going to be a big deal. So conventionals, the primary one we want to go with, mainly because it doesn't charge the upfront fees that FHA and VA do, and it also doesn't have the unremovable mortgage insurance that we talked about earlier in one of our other clips. FHA is a great program right now, mainly because the rates are a lot lower and it's not credit score driven. So someone with a 620 score can get similar to someone that has an 800 credit score. It allows you to qualify for a higher amount typically because it's more lenient on ratios in a lot of cases. It's also just a much more lenient program underwriting guideline wise. So more people get qualified for it because it's government backed from the standpoint of the Federal Housing Administration. It does charge an upfront mortgage insurance premium that's rolled into the loan. So it increases your loan amount, the amount that you're borrowing. So it can actually have a higher payment from that standpoint. And it has a monthly mortgage insurance as well that is added into the payment too. So you're paying multiple different mortgage insurance, which again makes it a more costly loan. But I've seen a lot of people, even with 740, 760 credit scores, using FHA lately because the interest rate difference. So we just got to play the scenarios out and see which one makes the most sense for each person. Another program is VA. That's our veterans and active military that we work a lot with. That's a zero down program, an amazing opportunity from that standpoint. No mortgage insurance, although it does have potentially that upfront mortgage insurance, like FHA was rolled into the loan. VA has a similar one. It's called their funding fee. It can be anywhere from zero if you have some disability through the VA or up to 3.3% for second time use. So it can be an expensive loan from that standpoint.
I didn't know it was that high.
Yeah, well, it's 2.3 first time use and 3.3 second time use. So it can get expensive when you're using your VA eligibility the second time around. But at the end of the day,
Usually in the contract when I'm doing it, I make the seller pay for it though.
oh, really? Wow, that's
Hmm.
awesome. That's
Yeah.
good. If you can
There's
negotiate
something
in to
in
get
there
that
in the
paid for.
financing addendum that says like if the buyer pays for it or if the seller pays for it. So I always try to put it on the seller versus the buyer.
Nice. Yeah, I mean, that's huge because that can lower the closing costs or the loan
Yeah.
amount, which obviously affects the payment as well.
Hmm.
And then lastly, we got USDA. USDA is very similar to FHA, other than it's zero down, and it's also more for rural areas. They're usually outskirt properties, properties that are a little further out of city limits. It does have an upfront mortgage insurance and a monthly, similar to FHA, but it's a lot less expensive. The downside of USDA is you just don't normally qualify for as much on USDA, and a lot of people get excited about it, but then find out they qualify for literally sometimes $100,000 less than FHA, and they kind of like, oh, well, that's great. It's great I'm qualified, but I can't find anything in the price point is usually what ends up happening, unfortunately.
So that doesn't help.
So those are the main four ones. But again, if someone says, what program can I get? I'm not going to know until I see your total financial profile. I need an application. I need to pull the soft pull on your credit. I need to collect your income documents because they might have income limits on some of the programs and things like that that we need to be aware of. So a lot goes into it, but those are the four primary ones that we deal with in most cases.
Okay, as a one-off for FHA, can I use it even though I'm not a first-time home buyer?
Yeah, absolutely. I mean, all those programs, including the down payment assistance, you do not have to be a first-time home buyer. There are some down payment assistance programs that require a first-time home buyer status, but most all of the programs, including FHA, VA, and conventional, all don't require any kind of first-time home buyer status. Now, first-time home buyer, just so everyone knows, is someone that has not lived in a house they've owned in the last 3 years.
Three
So
years. That's it.
3 years, yes. So if you own a rental property, but you've been renting for the last 3 years, you're actually considered a first-time home buyer again because you haven't lived in a property you owned. So that is a huge requirement that we need to be aware of, that a lot of people might be a first-time home buyer again. And there are some benefits to being a first-time home buyer in some cases. FHA doesn't have any benefits. They're just straight, we don't care. VA doesn't matter. Conventional has some really good, like 3% down, discounted rates, discounted mortgage insurance for first-time home buyers. So that's a really good program that we do look at, even with people with lower credit scores around that 660, 680. If they qualify as a first-time home buyer, we might end up going conventional because of the first-time home buyer status. As long as they're within a certain income range, it might make their rate better than like the best rate you can get. So there are some advantages that we're always watching for people to kind of slip them into these little niche products that are available. You just need someone that's got the knowledge and, knows the programs well enough to make sure that you don't miss out on some of those opportunities.
I love it. Thank you so much, Jeff. So basically, we have the four traditional types of loans. We have conventional, FHA, VA, and USDA. Jeff is obviously very well versed in all of them. So if you're looking for a lender, please reach out to him. And if you're looking for a broker to help you buy and find a home, reach out to me. Thanks,
Yay.
guys.